Goldman Sachs chief U.S. economist David Mericle joining us here. Good to see you, David. Welcome.
Thanks.
It's 4 months of missing the estimate. Is Sarah right about us misreading the impact of tariffs?
I think it's possible that the tariff effect is a little bit smaller. In particular, this month, we were only looking for a 5 basis point effect because we had seen the auction price data on cars looked fairly soft, even though autos are something that's been hit with a large tariff. I think the other thing, though, that we're learning is that there are meaningful offsets to any potential tariff effect that we got this month and might get in coming months. In particular, I think you saw that in the shelter category, where for quite a while we've had this catch-up inflation, keeping inflation a little bit elevated month to month. As CPI prices catch up to kind of market prices, that should gradually go away. Now, these data can be a little bit erratic from month to month, but gradually we've seen that theme play out. So there are other forces that have brought inflation down for the last few years. I think they have a little bit more disinflationary momentum yet to give, and that will provide a partial offset to the tariff effects. But is
data quality a question, given what BLS has told some outside economists about their sampling abilities?
I think if you had a ideal unlimited data set on rents, you'd probably see the shelter numbers moving a little bit more smoothly. In the months ahead, if they're not able to hire more people to go out and collect prices because of the hiring freeze, then I think that could eventually become a problem. It would limit the sample size that they can ultimately see.
So how does Fed Chair Powell explain his wait-and-see approach now that we have seen meaningful deterioration in inflation? For a while, it was that, okay, there was no progress, so he was just going to wait and see. But now we're seeing progress.
Yeah.
So how does he explain that?
I think this is it's a reasonable month to have expected to see some tariff effects. Some tariffs have been in place for a bit of time. And in 2019, one of the key takeaways from looking at category level data as the tariffs went into place was that the flow through happened pretty quickly. So it's not unreasonable to say this was a soft print. This is good news. This leans a little bit toward a smaller effect. But I suspect Chair Powell will be comfortable saying it is still very early. Some of the tariffs that the White House...
He's going to look political if he does that. I mean, they don't want to look political, right? But if they're going to say it's really early and we haven't seen the tariff effects yet, but we're also data dependent, but we're also restrictive, then they should be cutting, no?
Well, I guess I would say there doesn't seem to be a strong need in either direction at the moment. I mean, the labor market report has gradually shown slower job growth, probably for both supply and demand reasons. But unemployment rate is still at 4.2%. Neither the labor market data nor the inflation data are yet screaming that we need an adjustment. So I suspect they'll say it's early to make a decision on the tariffs, especially because some of the tariffs the White House has talked about have not even been announced, let alone implemented yet. And that there are still risks on both sides.
Meanwhile, for the rest of Fed speak, you had Kugler say you got to watch inflation first. You had Goolsbee say this might be the last vestige of pre-tariff environments. Do you think that tone changes once we get past the blackout window?
Possibly. I think, again, this is a reasonable timing to expect to see tariff effects. It's just that 1 month probably isn't a good basis for drawing a firm conclusion on this. So I think if over the next 2 months we still haven't seen anything, then the lesson of 2019 would say, well, these things tend to show up pretty quickly. So if 3 months go by and you haven't seen much, then I think you'd probably meaningfully change your thoughts.
Right. And your general view has been there might be a one-time effect, but it would soften quickly because of demand destruction, yes?
That's right, that any tariff large enough to push inflation up quite a bit and make us anxious about inflation expectations, probably also large enough to soften demand. And I don't see particularly high prospects for a prolonged bout of high inflation in a weaker economy. This is also a much less intense inflation rebound that we think is coming than what we went through in 2022. So it should be a lot less scary than that experience.